Today, we are cracking the code on Palantir, one of the most secretive, powerful, and controversial software companies out there. So how did they go from this mysterious spy tech firm to a Wall Street AI darling? Let's dive in.
The legendary investor Peter Lynch really said it best. If you don't do the research, you're basically playing poker blind. So today, we're going to take a long, hard look at the cards Palantir is holding.
All right, so let's start with the big one. Behind all the mystery in the headlines, what is Palantir really? What do they actually do?
Okay, so founded way back in 2003, Palantir got its start building software for U.S. intelligence agencies to help with counterterrorism. Think of it like this. You've got one agency with a flight manifest, another with a watch list, and a third with phone records. Palantir's software doesn't just hold all that data, it acts like a single unified brain that can actually find the hidden patterns connecting all those different pieces.
So today, the company pretty much lives in two different worlds. You've got Gotham, that's their original platform, still doing its thing for governments, defense, and intelligence clients. And then there's Foundry, which takes that same connect-the-dots superpower and brings it to the business world, helping giants like Airbus and Merck run everything from their supply chains to drug discovery.
Now, this brings us to a really key idea for any investor, the economic moat. It's just a fancy term for a company's competitive advantage, the thing that protects it from rivals. So what's Palantir's moat?
Palantir's moat really has three big walls. First, you've got insanely high switching costs. Once a company's entire operation is built on Palantir software, ripping it out would be like performing open-heart surgery on your business. Second, its brand and secret sauce tech create this huge barrier to entry. And third, their platforms just create efficiencies that are really hard for anyone else to copy.
And they're not sitting still. They're making that moat even deeper with their newest product, the Artificial Intelligence Platform, or AIP. This is a huge deal. It lets clients use all that powerful generative AI, the tech behind things like ChatGPT, but, and this is crucial, securely on their own private data. So they can build their own AI tools without ever leaking sensitive information.
The strategy sounds really powerful, right? But does it actually work? Let's get into the numbers and see what story they're telling us. For any company we look at, the first question is always the simplest. Are they growing? And for Palantir, the answer is a big, flashing yes. Just look at the first half of 2025. Revenue hit $1.87 billion. That is a massive 41% jump from the year before. And a huge part of what's driving that growth is right here in the US. American customers now make up 72% of their total revenue. That shows you they've had this incredibly successful focused push on their home turf.
But, revenue growth is only half the picture. For years, the big question mark hanging over Palantir was, but can they actually make money?
The first clue is right here, their gross margin. At 82%, that is incredibly healthy. It tells you that for every dollar of software they sell, most of it is profit. That's exactly what you want to see from a high-end tech company.
And this is the milestone that completely changed the story for them. After all those years of losing money, Palantir is now consistently in the black, posting an impressive $527 million in net income in just the first 6 months of 2025.
This newfound profitability is backed by an absolute fortress of a balance sheet. Think about it. By mid-2025, they're sitting on about $6 billion in cash, they have no real debt to speak of, and they have another $500 million credit line they haven't even touched. That kind of financial firepower gives them incredible flexibility to do whatever they want. Okay, so they're profitable, they're financially solid, but where's the next wave of growth going to come from? Let's look at the engines that are pushing this company forward.
It really comes down to three things. First, just explosive growth in their U.S. commercial business. It grew a mind-boggling 71% in the first quarter of 2025. Second, there's just intense demand for their new AI platform. And third, they are masters of the land and expand strategy. The average amount of money their top 20 clients spend grew by 18%. That shows once they get a foot in the door, customers just keep spending more and more.
But, and this is a big but, all of this incredible success leads us to the central conflict for anyone looking at this stock. That sky-high valuation.
Let's be blunt. The stock has just gone vertical, blowing past the S&P 500 and even the rest of the tech sector. And this forces every single investor to ask that one critical question. Is this price a fair reflection of the future, or has the hype just gotten way ahead of the reality?
Now, to try and answer that, analysts use a couple of tools. One is called a discounted cash flow, or DCF.
It's basically a fancy way of trying to figure out what a company is really worth today based on all the cash it's expected to make in the future. The other tool is just comparing Palantir to its competitors. And this is where things get a little nuts. Palantir trades at a price-to-earnings ratio of over 500. The average for the software industry? Around 42. No, you heard that right. It's more than 10 times higher.
Which, of course, brings us to the final showdown, the bull case versus the bear case.
And it really boils down to two totally different ways of looking at it. The bulls, they see a future AI giant with an untouchable moat, explosive growth, and a perfect balance sheet. But the bears, they see a stock that is priced for absolute, flawless perfection, where even one tiny slip-up could send that valuation tumbling right back down to earth.
So the question is this. Is Palantir a visionary bet on an AI-driven future that will define the next decade of technology, or is it a classic case of investor hype that has left absolutely zero room for error? For Palantir, that is the multi-billion-dollar question.